Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to go through the Forex market wrap. We're going to identify some of the charts that we looked into this week from the week ahead analysis video and some of the news that happened. So very high impact news week and ended up with a really kind of whipsawing week in terms of the dollar faded quite aggressively at the sort of middle of the week, and then throughout the rest of the week we've seen the dollar completely dominate again. So really interesting markets at the moment. High volatility breeds some good opportunities. So we pretty much kicked off with some core retail sales data and some PPI data out of the US. The only kind of shock was the little bit of a downside into retail sales month on month, which does suggest that maybe we are starting to see the spending of US consumers sort of slowing down slightly. So that's quite an interesting outlook there. We then had the federal funds rate, which saw the Federal Reserve hike interest rates by 75 basis points ahead of forecasts of 50. And that is a very aggressive move from the Federal Reserve in terms of the Fed haven't hiked 75 basis points for a very long time. So that is a very aggressive outlook from the Federal Reserve. They're even talking about 3.4% interest rates by the end of 2022. So more aggressive hikes to come by the sounds of it if inflation continues to rise. We then had some interesting data from the Swiss National Bank. Usually there's not much to come from the Swiss National Bank for the fact that they've haven't hiked interest rates since 2007. Usually we see a minus 0.75 result, and they actually hiked by 50 basis points as well. So it just shows you that inflation globally is continuing to be a problem, and even the Swiss National Bank have seen it as a problem and have hiked interest rates to minus 0.25%. We then had the Bank of England. Now, the Bank of England kind of disappointed investors because they didn't hike as aggressive as other central banks, and they only did a 25 basis points hike. Again, they're trying to balance the unemployment rate with interest rates, but that's not going to help inflation rates. So, moving on, what did we kind of look at from the week ahead analysis? Well, we actually looked at some potential pullbacks and some potential impulsive phases. So Aussie US dollar, we were looking at the outlook last week, and we noticed that price had dropped to the downside after we had this kind of head and shoulders pattern. We were looking for a continuation of that into this week, and we were looking at either the value area low to be tested or another price area of interest. Now, price did extend away and we dropped all the way back down into this high volume level down around about the 680s where price started to recover then, and we recovered back into this high volume node at 7048 before seeing price continue to the downside. So here you can kind of judge that we've had a very strong US dollar, very weak US dollar, and then a very strong US dollar towards the end of the week. So very high volatility markets at the moment. We also looked at some potential downside for pound. We did expect a pullback because price had dropped so significantly. We were looking for opportunities to maybe come and see price back towards 124.50. We didn't quite make it there. Unfortunately, price dropped continually to the downside. There was opportunities back down here around about the 120.50s for a long, which proved to be quite a nice move in the end, but then price found a sticking point around about 124s where this low volume rests, and we've been moving lower ever since there. So again, a very choppy week for the pound, looking like that dollar strength is coming through though towards the end of the week. Kiwi dollar, so we were looking for opportunities on Kiwi dollar. One of the areas that we were looking for opportunities was this value area low, around about the 0.6390, 0.64 area. Price did come up into that band there. We saw a nice rejection, and price has sold off since, showing us that there were sellers resting up at this previous value area. So if the dollar is going to continue to strengthen, we could see a small pullback next week and a continuation back down towards the lows. Finally then, the S&P. So the S&P, we were talking about the fact that the S&P is quite bearish at the moment. We even outlined this week the correlation between the S&P and Bitcoin. And with the S&P breaking lower and continuing to push and make new lows, price of Bitcoin has also fell. So interesting market to keep your eye on. If the S&P does continue lower, there is a massive level around about 3,400. But this is kind of showing us that the market negativity is quite strong at the minute, and it doesn't look like we're going to see a strong sort of S&P 500 for the time being. And we could still see aggressive selling. I think if we sell off aggressively into the close like we did the week prior, then we could see a similar thing where we gap into next week and see a continuation. So be aware of that. But I hope you enjoyed all the content this week. If you did, please leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content, and I will speak to you in the next video.